Go here. Good morning. This is the Hawkeye Trading Room. It's Friday, November 27th, Black Friday. We're going to go on to about 9:30 this morning. Trading the foreign exchange on margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to invest in the foreign exchange, you should carefully consider your investment objective, level of experience, and risk appetite. The possibility exists that you can sustain a loss of some or all of your initial investment. Therefore, you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. This is a live trading room. It is for educational purposes only. No financial advice or recommendations will be provided. Any trade taken during this live session is not a recommendation or a suggestion that you should also do the same. Past performance is not indicative of future results. Do not trade money you cannot afford to lose. And before trading live, always operate with a written trade plan that identifies the rules for entries, exits, targets, and risk management. And with that, we will go to the charts. And we're going to go to this one right here. And right now, we just got an alert on the U.S.-Canadian ascending trend at 8 o'clock. I have not drawn it out yet, so let's just take a look at this one. Let's take a look and see what it looks like on the higher time frames, and then also look and see what it looks like on the alert. What I'm finding out is a lot of these alerts have been going on, and it's been breaking out pretty much right about the time we get the alert. It is this was an ascending trend, so it was looking to go low to high. This would probably be the low we'd be looking at initially. So if it breaks this area right here where the alert was, which it looks like it's trying to do, you may be looking at a down move on this one. Let's see here. Let me get another chart up here so I can see what else we may be looking at on this. And I would say right now it is sort of in a consolidation mode. We had looking at this, we had a nice strong move down. This is all yesterday. This is the overnight high. This is the overnight low. This is really the playground we're looking at today for right now. Here's the high. Here's the low over here. Right now, this daily candle would be a red candle. It opened way up here, and right now it's playing right down here on a daily. So this is a down move. Looking like it right now, it's looking like it's just had a bounce off of its daily low. So we want to be careful about this. This is the range we're looking at. If the overnight high came in, we may be looking at this thing maybe breaking to the upside. The only thing is we have these moving averages coming up. So we're going to have to be aware of that. So let's draw those in. Here's our 15-minute 62 moving average. Just put this over here. I'm going to go and lock this right now. Here's our 15-minute 62. And here is where the low of this move was, where the alert came in. And we had pretty much, there's a little triangle, sort of had some consolidation, drop down, pulled back, drop, made the low, came up, made a new high. So this is really, right now it's trading inside this area pretty much. In fact, let me just go ahead and draw the triangle. I'm going to use, this was an ascending wedge, so I'm going to draw from here to here, tuck this one in close by on the low, take this one up high, and now we have an ascending triangle trending up. And this, so that's the area that I'd be looking at right now. Let's take a look at it on a lower time frame. 15.5. Here's our 1 minute chart. That looks just a little too bold for me. I like that a little bit. It's a little bit easier for me to see it. And let's see. So right now, it did break, to tuck this one in a little bit closer. This looks like this could have been a trap down in here. I'd be waiting for this these RSIs to come on up above the 75 area, give a hook, and then maybe be able to take it short. I'm not really liking this. I'm not looking. I don't like the position of where this is right now. It already had a nice bounce off of a low, and let's see where our fib lines are on this. Let's put a 5-minute fib line on, see where they are. You see, it came down, broke the 5, came down, broke it, tested, came back, rechecked it, broke it again, went up higher, came back. Now it's retesting this green fib line again. I like this thing more to the upside, but even with that, I don't know if we have that much room to the upside before we run into L. That's 9 pips. I'd like to see a little bit more of a range on this one. If you take it, it'd be very aggressive down here. If we get the moving average flips overs, which we did have a nice strong pullback. This is on the 1 minute chart. Let's go on the 15-minute and see what we have over here. This is all sitting right in the middle between this 40-60 range. So it's kind of going sideways without a whole lot of volume. Again, on this one, I would probably just stay out of this one for right now. We do have our 62, 15, 62. We have a 30 up here. If it does break through, I would have to see it break above these 5-minute 62 moving average. I'd like to see a break above that first, and then see if there's enough room to the 30-minute 62. So that's pretty much what we're looking at right now. I would keep an eye on this one. If it breaks, if we get a tag on this, I'll maybe get an alert. We'll take a look and see how it reacts to it. That might be a possibility. There again, if you get a break on this one, you're only looking at there's about a 6 pip, about 10, about 8 pip move to the, and till you get the spread of, you have almost a 2-point spread. Do you pay the dealer? You're not going to get much room out of it. I don't know it's worth the risk. And let's go over to the Aussie US. And that had a descending wedge. Let's draw that one out real quick. That one looks like it has a little bit of movement going on here. Here's the overnight high. Here's the overnight low. It was a descending wedge, so we're going to tuck that one in right about where we had the alert. And we have a lower time frame. This is you can see where it had a lot of bounces off the bottom here. Let's see if there's a fib line over there. Here's a blue fib line on the 15-minute chart. That's a significant area. This was basically where it opened overnight. It went down, made a low first, came up, made the high. Right now it's in the green area of a daily candle. See, it opened right about in here, went up, made a high. This one would be green. This is what the daily candle is looking like right now. It's still a green candle. It opened up down here at the with the low, It made a low over when it opened up, and then it ranged to the upside. So we have the red part of this daily candle is down below. I'm just drawing these things out, giving everybody a little bit different perspective of what's going on the daily price action range. Here's the upper trend. Here's the wedge. We have the bottom of this wedge area I'd be looking at coming in from here to this pivot low. Right now it's inside this this wedge area, this triangle. If it breaks, it's coming down. It will probably retest the open, and then it could possibly go lower. We did have right now, again, everything's still pretty much in the middle of the range, so it's not really doing a whole lot, and it's somewhat range bound. The overall price action from the overnight high and low was 33 pips. There's plenty of room in there to take a trade, but right now we're right in the middle of everything. You can see that we're right in the middle of this whole range. And so right now it's a matter of whether it's going to retest the bottom or come back and retest the top. I would wait for it to come down in this area, then maybe take it long, or wait for the breakout from the bottom. Or if it comes down here, you could use this as a possible trap area. To possibly get in to take it to the upside. And so if we draw the triangle from the wedge, let's do it on a 5-minute chart. And let's see, we had, here's the alert at 7:30. Just broke up, just poked its nose right up in the top of this. Let's see if there's room from here to the downside. And we're going to bounce off of 32. That's what I'm looking at right now. See if we get a bounce off of that. If it can penetrate this 30 minutes 62, again, you're only looking at pretty much 7 pips down to where the day opened. And so it might go lower, but oftentimes we'll get that bounce off of this. And if we do, we're still sitting inside the middle third of this whole range, daily range. If I draw this Fibonacci from here down to the whole range, you can see we're right smack dab in the middle of everything right now. I like to see it come down and confirm, either come down and maybe hit this area down here where the low was, and then maybe or up the top. I would just be patient with this one. Again, we have 1.4 point spread. You're going to be paying three pips to the dealer in and out. And right now, if it's inside this range, you're probably only looking at 11 pips. It's a crapshoot. Any questions so far?
Nothing.
Nothing. Where's Mr. Matt this morning?
I'm not sure. I haven't heard from him myself.
Let's see. Any other alerts come in? Not yet. Let me take a look at some harmonics. Maybe we can make something of some of that if there's anything here. We do have a Canadian harmonic. Let's take a look at that one. See how that may tie into our US CAD trade. And it has a Gartley. That's one of the ones I like to use. And it's already well past that one. Yeah, this one's already done. This one drew the harmonic, had an entry target right up here, came back down, and sorry, made its target 1 through 3. So right now it's coming down. It's retesting the bottom of this area. Just move that over to the side here, and we'll recheck this. Yeah, that helps to kind of confirm the area that I was looking at for the price range. It was 1145 on the 25th. Yeah, the price range, the price that the harmonic that it drew was, let's see, it started 24th at 1145, 24th. Just looking at this little drop base area right here is where the thing looks like it was looking at. So do it from this point down to, looks like over here. Then it came back up to look like this area. And then it formed its C right at this area. And then the D was up here. Into the D right there. You can't, and it came up and had an entry right at 130. As it
Al?
worked out. Yes.
Sorry, I have a question here from Pedro. He says, so 1.4 spread means 3 pips. How did you calculate that?
Well, I figured that there's a spread going in, there's a spread going out. So when you buy, I always figured that just double the spread because you're gonna pay the spread going into the trade, you're gonna pay the spread coming back out of the trade. In order, it needs to have to, if you want to, it has to, if you have a target, it has to cover that, go through that target by the same spread in order to get out of the trade. And when you get into the trade, it's whatever the price is when you get into the trade, you're going to be paying you're not going to get the exact entry because of the spread. So I just figured you pay double the dealer. Just like when you pay the commissions, you pay commissions going in, you pay commissions going out.
That makes sense.
I usually double the spread, and then I figure double the spread, then add what my target pip is if you're looking for 5 pips. And you have right now we have a 2 point spread, almost a 2 point spread on here. It's going from 0.6 to 0.7. I just saw 0.2, 2.0 just a couple seconds ago. So the spreads are widening. They keep on adjusting these spreads. And so if you have a 2 point spread that you're paying 4 pips, you want 5 pips to yourself. You need a 9 pip, 10 pip move in order to just come close to getting what your target is. And then you have to get really, really good fills. That's why I usually like to see I would like to see at least a 10 to 12 pip target in order to get my 5 to 7 pips out of it. And so hopefully that answers your question, Pedro. This is the playground which we're dealing in right now. And right now we had the entry up here, and it is losing right now it looks like it's going to come back and retest the overnight low is what it looks like it's going to do. If it breaks that, which is right here if you see where this harmonic was drawn. So this was a range that was for the last 2 days. It didn't really do a whole lot yesterday, and a lot of this may have been affected by the U.S. markets being closed yesterday. This was Wednesday's move. And so this was a range on Wednesday. Right now we're testing it broke the bottom of that. But if you look over here, if you see where the A is on this harmonic, when I consider these to be very significant areas where these things are drawn because they're looking at price range action reference to what it did before and what it projected afterwards. And so these are significant areas where you're probably looking for balances. You can see we never got a close below where this from this harmonic was. And this thing nailed the entry pretty much right on the money. The entry was 103.26 or 130.26, which is right here. This was the entry to sell. And they had a stop up here at 30.34. And that would have been right 30.34. And so they're using roughly, this is roughly a 10 pip stop. These don't always work out, but oftentimes they do. That's what I'm starting to pay a little bit more attention to. And you can see where the stop is right up here, just a little bit above where the X of this harmonic was. So when I get these, it's worth taking a look at, especially when we got a wedge alert. Like in this case, we got the wedge alert here. But we also know that there's some major price action that's going to be bouncing off of, especially where that other harmonic was drawn. So I would say, again, I'd be looking at this being more of a trap into this area where the AC area is. I'd be looking at this being more of a trap. Especially being on a Friday after a holiday, you're not going to get, I don't expect there's going to be a whole lot of real volatile moves today. Everybody from the US is still out. They're still in holiday mode, myself included. But this is pretty much what we're looking at there on this one. And let's see what the stock market looks like. It didn't make a whole lot of movement overnight. And let's see, we're looking at an Aussie US, which is the other one we were looking at. I'll try and pull that up here. Take a look at my other indicators and see what we have that may be of value to us. Looks like with the New Zealand might be something too coming up. Well, here's the break. Here we get here's where our wedge alert was. It looks like it's trying. I'll tell you, when you get these nice strong move down and you get a straight bounce up, that's often a good time. That it just tested that area. Now it just broke the top of this wedge. You can actually probably, I'm okay with moving this thing over to reconfirm. We have an anchor. Let's check this over here a little bit. Here's an anchor. Here's a hit. Here's a hit. Here's another hit. This trend line has been confirmed. It looks like it's just about ready to be broken, or it is being broken. We came down. It has strong move down. Tested the 30-minute 62. Created another pivot point. This one's not confirmed yet. And let's see where our Fibonacci's are. I like to use a 5-minute on this one. We have here's our green zone here, up here on this one, right? If I take the total range and just go right from the green Fibonacci to the, let's see, to a blue Fibonacci right here. Here's our range. This is the range it's trading in right now. This is probably a 22 pip range. Oh, it's the US. This is, why am I missing one here? That's 12 pips. Why was it only 12 pips? There we go. There's the 21. That's right. There we go. So right now it's just in the upper third. It was hanging around in the middle third. Now it's in the upper third. But now as it broke here, it's probably going to find a little bit of a bounce right in this area. So the question I had to pose to you is that worth 4 pips? If you take it, is it worth 4 pips if you get a bounce here, which it may or may not even get up there? To me, I'm just going to let this one pass. I'll watch it. I'll learn from it. But I'm just going to let this one pass. It's been just too range bound. Now, if it were to break this one, Now you have a good shot of coming up to the top of where the overnight high was, and then you would have a chance of getting your 5 pips if it goes up the midway part of the. If it goes up the midway, let's see where's the next room. So if it goes, this would be the next possible target here. If it breaks through the green area, when we go from a blue to the red, that's covering 2 of these. You'd probably could get your 5 or 7 pips out of it. If it breaks through, if it comes up here, I would say this, if it comes up to this, we had the break. If it comes up and tests it, maybe even go a little bit higher, comes back and retests the wedge, and then you could take a shot at maybe going up to this area. Being on today being Friday, I would not expect that too much. You might get a bounce off of here, a retest, and then maybe another little test up to, I would put it maybe about in the middle, maybe up to about this area. And with that, you'd be looking at, that'd be more of a realistic projection for this time of day, this time of the week. That would give you 13 pips. You could probably get your 7 pips out of it if it come, but I would want to see it come up, test the green one, come back, retest it. Maybe get a close above, and then if the RSIs are giving you enough strength, push to the upside. But right now, like I said, they're all right here sitting in the middle. I would like to see these be a little bit more closer to the 25 and 75% areas. Is there any pair that anybody would like to take a look at? Anybody see anything that somewhere along the way that is of interest to you? This is Open Mic Friday. I urge everybody to turn your mics on and ask away. It's a lot easier listening to you than it is to try and read what you might have to say.
Don't be shy, guys.
This is not the Alan Eva show. This is everybody's participation.
Exactly.
Let's see, anything else we can talk about right now? I said I'm not really seeing anything that is excited me today.
Well, let's just have a little look here.
I'm still a little bit in the.
You're still in turkey mode.
I'm still in turkey mode. Let's see.
We got a.
We could take a look at our RCS tool and see if there's anything that looks like it might be fun. Looks like the euro is strong all across, the strongest one across on all 4 time frames. So we'd be looking at trading the euro to the euro strength.
Actually, Al, Leslie just said, can we take a look at the euro US?
We certainly can. Thank you for asking. Let's go to the euro US. Let me go to this one. Let me do another duplicate chart here. And euro, you put it on the euro USD. And let's see if there's any harmonics that might be looking at euro. Oh, yeah, there is one actually. Euro USD. Let's see what this one is. Bullish bat, it says. Take a look at this. Euro USD. Oh, this is actually looking, this looks pretty interesting. I think this might be a good one to at least take a look at and keep an eye on. We already have the harmonic. We have our C already. Now, one thing, like I said, with these harmonic patterns, one thing that's nice about this, the company that puts these harmonic patterns out is they'll mark the C and they'll project the D. Some of these platforms where you do, they'll say, well, here's the D. But what we're looking at, we're trying to catch this C to D move is what we're trying to do. And so when it draws the harmonic, it has the C. So we're looking at seeing where we can find a wedge or some sort of pattern up in this area, right around where the C is. Now it did break this C, but it's still within this triangle. If you draw from the A to wherever this high ends up being, and we can get a nice little triangle wedge break, then we could be looking to see where the downturn is going to be. So let's draw this one out. I'll move this over so I can draw it. And we'll put it on the Euro US chart, put it on the 15-minute. Make this big and see where our, it started off with the X of this thing was down at 7:30 on the 26th. It's probably going to be right down here. So this is the harmonic, that this is the range that it's looking at. Now they'll take note, we have a nice strong move down on this one. And so this is where it started this. Now these things come in different time frames. This was on the 15 minutes, what this one was indicating. So it's had the X down here, had the A up here, brought down to the B, which was, they marked it here because that's where it fulfilled the requirements of this particular pattern. And then it targeted down here to the 1890 area. Now these aren't etched in stone, but it does give us a good target range, and so it gives us an idea of what we could be expecting. So with that, I'm just going to go and lock this. Now what I would normally do is I would what I will do is I'm going to draw a trend line from the X to the B area. And I'd be actually right now we're looking for a break below this for the target of D. Right now it's still sort of consolidating. We did get a break here, but you also see it didn't close. So right here, this was a little bit of a trap area, but that may just be a test of a level before it actually gets down there. So this is the area right now I'm concerned about, this area if you see A and C. Now the thing is that we're looking at is we have, here's our A, here's a, actually here's a low, and here's another. So basically this is a double bottom right in here. So I'm going to take this over to this one because it's basically the same point as where that B is. And I'm going to bring this thing up to, let me just take it to here for right now and see what happens. And I'll flat bottom this. And you're seeing right now, you're seeing actually, let me take it over here. This could start actually making a little channel coming down. This could be the trap, right? The fact that it marked the C right in here, I'm looking at this as being possible, a trap to come down, retest this. If this thing can break, which has already been broken once, then we could be on our way down to where the D is. So I would draw this out with something like this. I would use the top of the A. I'll use the C area. Use this as a trap. Go on a lower time frame, see where our Fibonacci lines are. See if there's anything that's going to give us an indication that we're at a good spot. I like this the blue fib line. The blue fib lines are major lines to me. Every time I see it bouncing off of, especially a 15-minute fib line, let's just let me get on a 15 minutes, see where it's at. See if there's anything there. Not on the 15, let's check the 5. There's a 5 right there. So we have a green fib line off the 5-minute, which is right where the price is right now. This could be a nice little trade right here, actually.
Can I ask you a question about the fib lines?
Sure.
You said the blue fib line, that's the one that ultimately will decide if it's going to keep going up or if it's going to be support or resistance. Is that right?
Right. They are the support or resistance lines. The others are basically the factors of those support and resistance. These are, usually it goes from blue to blue, and then it stops in bases inside between. But usually these are the extremes. These are the extremes. So when you And the higher the time frame, the higher the time frame blue is. Like this is a 5-minute blue. Like I said, if on this blue, on this 5-minute blue, you're going to notice that I'll put it a 2-minute. I like the 5 minutes more than any. I'd like the 15. If it hits a 15, I'm really excited. If it hits a 5-minute, I'm more excited than the 2 minutes, because 2 minutes are just, they're only 7 pips apart, which gives us a nice little range for our 7 pip targets. Uh, but
Yeah, that's what I was going to say. So the other ones are basically, this is simplistically putting it, obviously, that they might be something that you could consider as a target, whereas the blue will help you decide whether it's going to go ultimately long or short, depending on
yeah,
whether
yeah.
what it does.
Now this one looks like it has a little bit of steam coming in. It's like coming on up. I always look for this to be a pass and come back and check this green line. Now this trap may not hold, because it looks like it's got a little bit of momentum here. Let me see the US. Let me put that on something else. Let's see. This may be a good one to just be looking at here today. Oops, wrong one. Actually, the Aussie's breaking out to the upside too. Let's take a look at that real quick before we. It looks like the Aussie's sort of following the US on this one. We'll see if it comes up and retests 73. There's a green line here on this one as well. If you look at the Euro US, it's doing the same thing, passing the green, coming up on testing the green. Oh, let's see, this thing has some room to the upside. I would say we could possibly get a wedge break close on this. This is the Euro US. That's 9 pips on. Yeah, that's nine. That's a 9 pip break on here right now. It's breaking the upside off this harmonic, so when this harmonic may become invalid at this point in time. But be aware of this point over here. This was yesterday's high, looks like. Yep. So this really could be the trap up here. It's already broken through the A. So right now we're looking at this area right in here for a possible bounce off of this. Here's our green line. Here's our red fib line. Here's our blue one. Now, if you look and see where this 5-minute blue, any blue line on a 5-minute or a 15 is going to be a blue line on a 2-minute. So if I go to take this to put this on a 2-minute fib price, you can see there's probably going to be there's a blue fib line right there. Now that's the 2-minute. Like I said, if it's blue on the 5, if it's blue on the 15, it's going to be blue on the 5 and blue on the 2. That's one reason why I like, especially when I get the blue being the support and resistance. If you get it on, the higher the time frame, the stronger the move's going to be, or the stronger the reference is going to be on that fib line. See, it came right up. It just bounced right off of that green line. Now, if you had this break right here, you had 3 pips to you had 6 pips. So you could have gotten your 5 pips off of that. But there again, I don't like just having a 5-pip target. Now I could be looking at a bounce off of that. If it can, if you get the bounce off that, if it comes back, we also see that here's your 2-minute blue right here. Here's our 5-minute blue, green, red, 2-minute blue, and then so you can see where it kind of was fighting this area right here, and it goes up for 7 pips to the next level on the 2-minute. Let me put my green line on here, my 5-minute green line. That way you can more easily see what I'm talking about. And here's our 5-minute green. I'm going to lock that. And as you see, here's a green line. Any line on the 5 and 15 is going to be blue on the 2. That's just the way it works.
Pedro's saying that the Aussie US is going long. It's close to breaking.
Yeah, it's pretty much following the euro. Let's see what the Aussie's looking at on this. The Aussie's strong. It's actually the euro is still stronger than the Aussie, but they're both stronger than the U.S. U.S. is actually kind of it's on the weaker side, but it's still on this 3-hour or 1-hour chart. It's still kind of in the middle. Let's put it on 3 hour. See what it looks like on 3 hour here. And we're coming up on 9 o'clock pretty soon. So this is probably the pre-9 o'clock move that we're oftentimes look at. There it goes. Yeah, the Aussie on the 3-hour chart, the 1 hour is almost the weakest one next to the British pound. So I would say right now. You could trade almost anything against other than the British pound. I would trade against the dollar. And it looks like the euro. I said it looks like the euro and the Aussie are kind of hand in hand here. What they're doing right now on a pullback on the Aussie. If the Aussie pulls back, we can take it. You could. I would wait for the pullback on this Aussie to take it long if you want to take this trade. And the Euro US, I'd probably say about the same thing. Let me look at that. Let's see where our retracement tool is here. The Euro US is bouncing off. Yeah, that was a pretty strong rejection off of that area right there. I would say this thing may come up and maybe give you another shot to get your 5 pips out, but it's probably not going to. I would not. I'm not thinking it's going to be. Well, the euro is against. You're going long on the Euro US. 7-1. That's still pretty good strength there. Look at the 1-minute chart, and what I would be looking at this is that if this thing can hook on the 1 minute on this Euro US, and it's probably going to be the same thing for the Aussie. Is if you can get this thing to hook, get the moving averages to not cross it, to keep the green above, then you could probably use this for a stop, use this for a target, and see if this thing pulls back enough to get a trade in here. I'm not taking it, but I would say if it pulls back, at least if this thing pulls back, I say 6 to 9. If it can pull back to this the green fib line to retest it, you have a little bit of a trend here, a little bit of you have a channel developing here. If you see that, if you can get this blue one to cross over the orange one, you could try taking it long. I might try that. I'm not going to take this live. This is just for a demonstration purpose. If I can even get in there. And I'm going to be looking at going a buy. If we can get a blue candle to close above this other blue candle, you could do a buy market. Wait till this one closes. Then we have about 14 seconds. I would do it right about now. Market entry. I go for 7 pips. stop will make 12. Actually, I'm going to go for, yeah, we'll go for 7. Here's my take profit. See, that looks like a long way up there to me. But I think you might be able to get your 7 out of this one. It is showing some upward strength. Oops. This is our trap area. I would say this harmonic is no longer valid. And let's see where our next fib line is. Let's go back on our 5-minute charts. That's not a bad chart to be looking at when you're in the trade. See where our fib lines are. Just past the green, and we should have a red one up here somewhere. There's a, this could be a possibility of a, I'd say midway between, let's see the green, here's the red. Let me mark the green one up here, or the red one up here. This is 5-minute red. So we have the red, the green. Let's draw our inner trend line. This is what Brian does on Monday nights. And so the target, I could say the target could be probably right about, probably in the middle between this zone right in here. I wouldn't push it too much more than that. If we have our 2 minutes, now we mark our 2-minute fib lines. Just all we have to do is go on a 1-minute chart and turn them on. And you see it's right here, it bounced right off this 2-minute green line right there. That's why we use 7 pips, is because that's usually the spread between the those Fibonacci lines on the 2-minute and 5-minute chart. There's 7 pips in between, 21 pips between the red and the green on the 5, and you break that up into thirds, so you have 7 pips. Now give us some time. Right now it is trending. You have a high, a higher low, higher high, higher low, higher high, higher low, higher high. Actually, now if it breaks this, it should be, and I would not be surprised to see it stall right in between. Could get a little bit of a pass and check, come back down and retest it. That's only 5 pips, but that would still be a win. Let's see if it gets that. The fact it drew a harmonic and it was breaking that C made me think that it was having a lot more upward pressure than what it was indicating off just from the price action. We are showing strength. Our RCS shows 5 on the euro, 1 on the US. Let's see what the Aussie did. Aussie's still looking at the same thing. Hasn't made the move yet. These are still coming on up. We saw strength to the upside on the Aussie as well. this may be the slow horse in the race. Remember I mentioned about like with the S&P, the Dow, and the Nasdaq, especially near the end of the day when you start watching it, watching those three indexes. I like to bet on the slow horse in the race. In other words, like if the Dow's taken off and the Nasdaq's taken off, and the S&P is lagging behind, take the trade on the S&P because it's probably going to follow suit with the overall market. This is probably a lot the same thing where this is a slow horse in the race. The U.S. the euro already took off and accelerated against the dollar, and now the Aussie is also strong against the dollar. And this is just saying, well, let's just see what the euros does, and then I'll just follow along. Let's see if that has any. You see, it came right up here, bounced off the green fib line. And project to see it happen somewhere in between the, here's the blue. There's my other one. Yeah. If you're in this trade, I would expect you might be able to at least get up to, well, I would say, no, it could very well get up into where this this green black area is as a target.
Pedro has a question now.
Yes, Pedro.
How do you get to show the RCS strength in the scale 1 to 10?
It doesn't go up to 10. It only goes up to 0 to 7 on the RCS. All it's doing is comparing what the numbers are basically there's 8 pairs that it's looking at. And so all it's doing is saying what that pair, what that currency is reference to the other 7 pairs. So you're showing the highest it goes is to a 7. That's when you see a 7, that means that currency, in this case, it's going to be the one chart we're looking at right now, the Aussie is the number 7 of the, actually it's the strongest of all the pairs. It's flipping between 7 and 8. And if you look, the euro is probably slipping between 7. Oh, that's 1 minute. Hang on. An Aussie 5-minute chart. Let me go to euro 5-minute chart. And if you look and see, you'll probably, if you look and see where this right now, the euro's a 6, the Aussie should be something is a 7. So basically, the Aussie and the euro are flipping back and forth between 6 and 7. The Aussie's a 6. There's a 7. Now, as soon as that goes to a 6 again, there should be that's a 5. So that means this thing's getting weaker now. So this is starting to form a pullback on this one right now. Has a nice little run. Now maybe coming back to retest. Yep, there it goes again. It's pulling back up. That was just a little bit of a breather. Let's see what the Aussie's looking at. The Aussie's doing pretty much the same. The Aussie and the euro are the 2 strongest right now, from what I'm seeing.
Oh, well, okay. Oh, sorry.
Oh, no, go ahead. Go ahead.
He's saying that his indicator isn't showing the scale at all. How do you get it to show up in your settings, right?
Yeah, that's in your settings. You go to your settings tab, right? You're not seeing the numbers here. Is that what you're saying, Pedro? If that's what you're saying, go to your, just click on your chart, right click, go to your settings tab, and go to where it says, let's see, indicator, title and value. Let me see, this might be the one. I think this, let me go to symbols here first. Always have to check and see. Here we go. This is the one I want. Here's the indicator last value, and here's the indicator name. So if I slide this over and look down here, if I click on this tab that says indicator name, you'll see where it shows you what it is. If I click on indicator last value, it takes the value away, but shows you what the indicators are. But you need to have this tab to show you what the value of it is down here. And this should be on a 14 period. The reason why I turn these labels off, because I get all the labels up here as well, and sometimes it gets a little too cluttered. And I just know by the color what pretty much show which one's which. I know the euro is always red, the U.S. is always blue, in fact, almost all the pairs that we look at are U.S. based. So whatever the other color is besides the blue, I know that's the other color of the pair. Did I answer your question there, Pedro? This thing's still working its way up here. Aussie's probably doing the same. Showing some strength there.
Yes, thank you, he says.
Good. And there we should, okay, we should be getting, we're right at our target on this Euro US. Should be at the target on the Aussie if you took the Aussie trade under the same situation. And boom, there it is. Done. Remember, I like to wait and see when you get these RSI pullbacks. You get the RSI. You try and wait till you get the blue one to come back across where if the orange one, the 8 period, if it's showing strength, and you see the blue one pulling back below, wait for it to come back and cross above, and then try and get into the trade. That gives you that way it gives you the wind to your back on these trades. Because as long as this thing's heading on down and the other one's heading up, you know you've got a little bit of a headwind. But as soon as that that lower time frame hooks back over, now you know you've got the wind back to your back again. You don't have to fight it quite so much. And the Canadian, let's see where the Canadian is with our. So right now the Canadian is still fairly weak. These are pointing down. They're out of the 40-60 range, so they're still pointing down. It broke through the trap. This thing could go lower now. Let's see where our fib lines are on this one. It just broke through the daily. This purple one, I think, is the daily open, I believe. Let me see if I had that right. No, that was just a reference point. Disregard that. That was something else. Well, this was probably an old 62, was what that probably was. This trap's no longer valid, but it is right at the daily low. Oh, I know it was. This was a harmonic low right here. Now we did get the close below that. Now look and see we have some fib lines here. Here's a 15-minute green right down here. It could go for that one. I'll lock that. Let's go to our lower time frame. We have some weakness, and we have the break. Canadian dollar is still strong. It's going to go to the short side. We could maybe take this trade. This one's already broken out of the bottom here. Here was the alert. Here was the low. Came up, made the high. And that was what was that? That was an ascending wedge. So it actually broke through the bottom of the ascending part. When it broke through the C on this, that was the entry. We weren't watching it. At least I wasn't. We also have to know we're looking at right at the bottom of this of the low for the day. It broke through that, closed. We have 5 pips down here. So it's at right now it's at 80. You could maybe get your 5 pips to the bottom of this. This is be a little bit late in the game. Do a sell stop down here. Try a sell stop at 29.82. That's almost 7 pips there for a target. We're not filled yet. Now this candle can come up and not close above the top of this one where it opened. That'd be a good sign. Now we're in the trade. Maybe I'll use this for a stop possibly. It'd be a really tight stop zone. This candle opened, came back down, came up, couldn't break through the top of where it opened. We're in the trade and use this for a target, the green line. It is showing some strength to the downside. You have the blue below the orange. Orange is still pointing down. Everything's pointing down. If we get a hook off of here, when it gets all the way down to the 89, we get a blue hook, and the orange is still coming down. That may just be a temporary pullback. We do like seeing this get below the 75 before we're looking for a reversal. Right now, I'd be looking at the Canadian dollar, looking at the 1 minute chart, looking to make sure that we keep those moving averages looking in the right direction. Right now, they're trending nicely to the downside. 62 is way up here. I use that for a close above the upper 62 on this 1 minute. I'd be looking at it to try and keep my stop above that, but I have a zone right here I'm looking at. I would take this pivot high right here, and I would put the stop right at the 62 on the 1 minute above that mark. As this thing's sloping down, as this makes new lows, you can take the previous high and then you can move it down a little bit lower to trend it until you get to your target. Now, if we get the 5 period 5 minute 5 period exponential moving average, if it ends up crossing and closing above the yellow, then we may want to be thinking about looking at an exit point. Right now, everything's still good to the short side. And so we're a little bit late in the game because really this is where the break was. Here's the drop, a base, a drop. This fib line here would have been the better one to be using rather than getting all the way in. And we're getting down here near the end of this trade. This is kind of a little bit what not to do. I think it's important for me to show you what not to do. It is to show you what to do and show you why. I would sort of expect to see this thing come up maybe in the middle between this red and up here. I could see it maybe come up just a little bit halfway between. Where's my red fib line here? Let's see where some 2-minute lines are. Here's my 2-minute blue. There's a 2-minute red down here. Let's just take this out of the way, and let's just draw a Fibonacci between the two of these and see where the chips fall. Remember, this was where that 5-minute candle closed. It opened and the 5-minute candle closed, opened, went down, came back up, retested that, and it went down lower to get us into the trade. So right now, this is just an area where it's consolidating, taking a little bit of a breather. Also, you can know that this is, I think this is where the overnight low was. So basically made a new low to the overnight. So it make a low. The fact it went up higher earlier overnight, and now we're coming into our U.S. markets. This thing could go on lower. London brings it up, then the U.S. brings it back down again. I have a little bit of a wedge right in here. Is a little bit of actually a little box, more of a box than a wedge. But here's a high. Here's a low. That's a little bit of just barely higher high, higher low, lower high. Let's see, it hit this bottom once, twice, 3 times. It hit this bottom and it was rejected all 3 times. It starts acting almost like a little jackhammer. It keeps on hitting it, and eventually it breaks through. Came up here, it hit this, so it's rejected this, rejected that. If it breaks through, we're good. If not, we may want to think about getting out of this trade. Now this thing came up, the RSI on this, the 8 period came up right about into the middle. This one came up to the 75 and now it broke through the bottom. You can see how the blue one is now below the 8 period. If it can hold it off of this, now it's back up again. So this has a little bit of a battle going on at either end of these. But if you look and see where the 8 and the 3 are up here at the extreme, you see that's right pretty much where this was up here. And a lot of times you kind of like to wait for them both to get down into that extreme area. As it is like right here, they're both in the extreme area. The 8, they're all below that 75 area. And now they're coming back out again. They're up here in the extreme up here. And that's right where the high was. There was divergence there. You can see there's a little divergence. And keep an eye out for those. So we have, here's a high, here's a higher high. And then you have a high. You come down here all the way down where it looks, here's a high. Now here's a little bit of a higher high, but this one right here is actually this was actually a little bit lower high compared to this one. So here's a little bit of the divergence. Had strength, and we had strength, but the strength here did not get up quite as high as this one did. This isn't a great example, but it is sort of an example of it. I'm not seeing divergence here yet. Sometimes you can see it better on the lower. They're more valuable when you see it on like the higher the time frame, the more valuable the divergence is. Let's see what we have. What we have it over here. This one's actually better here. On the 15-minute chart, here's your B, where we have the B. Here's where we have the D. A low or a high, higher high, and come over here. Actually, this one, it's not it either. It's almost just the other. There's versions where they have it where you have a higher high and a lower, but this one where you actually have more strength. This one actually has more strength than over here, but has a lower high. This is actually divergence as well. I forget what they call that. There's a term for it. I don't remember what it is. And actually, that's still pretty much about the same. It's still a little bit lower. Actually, it's about the same height, right? That's about even right there. This one's much lower. Looks like it's coming back down again. Here's a drop, a base. Now this could actually be a nice little trade here. If this has a drop, base, drop, we can take this tool and look for a possible target with this. So here's a drop, a base, a pullback, and then the target down would be down in this area. Not overly excited about this trade, but it has a possibility. It's starting to actually trend up a little bit, and I was forming an upward channel. Here's a high, higher high, low, equal low. There's the double bottom. And I bet we're starting to get the Fibonacci crossovers on here. I said this was an awful place to take a trade. We had a nice drop, a base drop coming back. Right now it's coming back to retest this area right up in here. There's a green fib line.
Excuse me, Al, I have a question from Pedro.
Yes, Pedro.
The highest point was also hit, fourth, I believe, in the trend line, arrow / resistance. Oh, he's got his a link in here.
Oh, okay. Let me take a look at it.
Yeah, he's asking which would have been the best entry point and what your thoughts are.
Yeah, you had the higher time frame trend line, which is yeah, I like that. Yeah, I'm liking taking the trades when it gets up into a higher time frame trend line that's already been tested once. This would basically be almost like your third hit or a continuation of the confirmed trend. That's a nice little hit, and knowing you have some other targets down here, yeah, I like that entry a whole lot better than certainly where I took the entry down here. This means it's already trending. Drop, nice little basing right in here. You can see how it's just going sideways into a small little range, and then it broke again. And that's why I say, I mean, I took this trade just to kind of show you kind of what not to do on this one, to show you how you're going to be fighting it down here. I mean, it still might work out, but this is the area right here where I'll be drawing a pretty much like a trap or a retest area. This is actually a retest. Strong move down. You can see how strong that was. No blue candles at all in this whole move. Now we're on a 1 minute chart here. Yeah. Come here, done it basing for about 5 to 10 minutes, and then it dropped again. Now this one came up and it's starting to kind of retest, but now it's retesting another trend, and it's still going back down again here. So, yeah, this is it. I like that as that's probably one of my favorite areas to try and get in, because if you're wrong, you only have this area right here. So this is what I call a nice little trap area. Use the high here, the break of the trend line, draw your trap, and wait for the price to get up into break it, come up. Because if you get filled up here, and you have a very tight stop, but you have all this downside potential all the way from this bottom move from here, from up here down to here is your first. And actually, if you could draw this A down to the bottom where this pivot was, where it came back and tested, here was the low. Here's a slightly double bottom or slightly higher low. This was a nice little move, retests it, come back down, retest the area, which is right here where it broke, retesting, and then it's kept on going. Yeah, that's a nice drawing there, Pedro. I think you're getting it. Thanks for sharing that.
Good stuff, Pedro.
And Leslie, you had a nice little call about looking at this Euro US. That was a nice little trade there too. But you see, it came right up. We got it. It got our fill, but it didn't go up a whole lot higher. And now it's coming back to retest again. So I say that trade is done. Aussie, pretty much the same rule. Came back in. Here is our playground that we're using. It was I have a green box, which is the green daily candle. The red box down below is where the open got lower. Here's as low as it went from the overnight. Here's where it opened. It went lower, came back from where the open was, went up higher, much higher than where the low was. So there was some upward movement. Came back down. Let me see if I can draw this. So here was the open right about in here. So let's put this so I can see with all these lines here. I don't know if I can. I can't really see it. But you can see right where with the green and the red, that's the end. That's pretty much where the open was. So it is making new highs again here. It's coming up to retest the high of the session. I like watching to see what the price action is on a daily picture, and that's why I've been drawing these. You've been seeing me drawing it more and more here lately, just so you can kind of see where I get my session breaks. I don't know my session break on this one. Session breaks on. Let's see where my blue line. So you can see where it opened. went lower, went up higher. Now it's makes the low came in first. This is probably going to close out as a bullish daily candle. You can see all the price action on this daily range. And then you look over here and you see what you can draw it again from what happened yesterday. Again, this was the U.S. holiday. So it was, here is the open. And it closed pretty much right at where the open. So it really had, this was like a doji candle, a daily doji right here, where it pretty much opened and closed all at the same point. Be the green area. And then over here, draw the red one. Open. Here's the close. I'm seeing this a lot with, especially like with the S&P, where you see it'll come down, it'll make a high overnight, and then it comes back down, just retest the open, and you can kind of see what the daily action is. So this is what, and so you see where it's like opened here, closed right here. That's pretty much of a doji. So there's not much room, and then you could see it now there. And you can look and see what the day before was. That was a green bar. That was a green daily bar, a doji, making a new high, and it's probably going to reverse then. Probably sometime next week, you'll see it make a new high for this week, possibly. It may pull back before the end of the day. You may see a pullback down to where the open was again. But that was a nice little move. It had a nice little wedge. A little more movement than I was expecting on today, but that did make a nice little range. Had the break of the wedge, but it had the break of the wedge here. Gave a head fake, came back down, retested it, and then it broke again. But if you got in off of this first break, you've had to be you've been 7 pips. You probably would have gotten stopped off. You used a 7 pip stop. If you use the bottom here, you have been okay with the 10 pip stop. You've been okay. But even so, the whole move was only 11 pips. You're able to get your 7 pips out of it. That's where these fib lines are really pretty helpful. You can just see because you can just see how often it bounces off of these price lines. Are there any other questions? Maybe about 5 more minutes, and pretty much already had a couple trades for the day. I think I'm about ready to wrap it up for the day.
Yeah, it's a pretty good session, actually.
Not too bad. Not too bad. So watch the open, and like I said, keep your powder dry. It's Friday, so don't expect too much today. If you had a winning trade today, you may just want to say thank you very much and go and have the rest of the day and not worry about anything. It's always fun if you're not having anything else to do, sit and watch the charts and just keep on practicing drawing and keep practicing looking for target areas and get a feel for what works for you. Because your personality is going to be different than my personality, and your trade expectations are going to be different than my trade expectations. What you would do is you want to find a methodology that works, that you can do consistently, and if you can get consistent with with 60% wins for 40% losses, and your wins are higher, you're going to be profitable. The part we run into trouble is if your 40% losers are average more than your losses are higher than your gains. That's where you start running into trouble. So you can have a 90% win rate, but you can still lose money if your losses are still bigger than your gains.
Leslie said, thank you for taking time away from your family to teach us, Al. Much appreciated.
Well, thank you for showing up, Leslie. I appreciate you showing up. It helps me to come here every morning knowing that people show up and participate and ask questions, and at least know that you're here, and makes me feel like I'm providing something of value to you. So with that, let's wrap this thing up. You guys have a good rest of the day. Have a nice weekend, and we'll see you Monday morning.
Yeah,
Thanks for
you
coming.
too, and I'll enjoy
Thanks
your
for coming
family.
in. Thanks for coming in.